We are surrounded by a lot of noise in the market. Some stocks go up, some stocks go down. But if you want to make real money, you need a strategy. And today, I'm going to show you my strategy for finding growth stocks with strong fundamentals. A growth stock is a stock in a company that is expected to grow at a rate higher than the industry average. This means that the company is likely to experience rapid growth in revenue, earnings, and cash flow. Growth stocks can be found in a variety of industries, but they are most common in technology, healthcare, and consumer discretionary. Now that we know what we're looking for, let's talk about how to find them. I focus on fundamental analysis rather than technical analysis. In other words, I look at a company's financial statements and other data to determine its intrinsic value. I don't try to predict the price action of a stock because that's just guessing, and there's no point in pretending that we're better than the market. We aren't. Instead, we focus on finding undervalued stocks that the market hasn't yet discovered. We do this by looking for companies that have strong quantitative signals. These are the key metrics that we'll use to identify strong growth. Revenue growth, earnings growth, cash flow growth, return on equity, debt to equity, and price to sales. But wait, there's more. We also need to look at qualitative factors such as a company's management team, competitive advantages, and future prospects. All of these things are impossible to measure with a simple formula, but they are important nonetheless. That's why we do this. So put simply, we are looking for companies that are growing their revenue, earnings, and cash flow at a rate faster than the industry average and that have a low debt-to-equity ratio, a high return on equity, and a low price-to-sales ratio. If a company meets these criteria, it's likely to be a strong performer, and it may be undervalued by the market. Once we find a potential undervalued stock, we can use various valuation methods such as discounted cash flow analysis or price-to-earnings ratio to determine whether or not it's actually undervalued. If it is, then we buy the stock and hold it for the long term. If you want to learn more about investing, stay tuned for more videos. And remember, the best investment you can make is in yourself. So keep learning and keep growing your wealth. Please note that this is not financial advice, and you should not consider it as such. Thank you for watching. Please like and share this video if you found it helpful.